If you do any kind of investing, no matter what it is, whether you invest in mutual funds, stocks and bonds, real estate, options trading, gold or futures, commodity options, you name it, sooner or later you'd like to get a return on your investment, right? You'd like to get the profit. And yet, the money that you invested was money on which taxes were already paid at the income tax level. So then, when you invest and the government doesn't take a risk with you, they still want a percentage when you reap the yield of your investment profits. Hi, I'm attorney Michael Potter, and I want to show you a legitimate and perfectly legal way to plan that'll benefit yourself, benefit your favorite charity, and at the same time minimize or eliminate your capital gains taxes. Now, if you're an investor and over time you've acquired some capital gains, one of the things you may want to think about is the use of the capital gains tax bypass trust. This is a charitable trust that allows you to have the benefit of the income for the rest of your life without the application of estate or capital gains taxes. And then for the remainder to pass to the charity of your choice, whether it's your church, your alma mater, your own family foundation, or the Boy Scouts, or the Red Cross, or the Make-A-Wish Foundation, any number of good charities. The Charitable Remainder Trust or Capital Gains Tax Bypass Trust is an excellent option to consider if you are an investor. Now let's take a closer look at how this might work by looking at a practical example. Years ago, we had a client who had a small manufacturing operation. He literally started it on his kitchen table. He and his wife would work on weekends after their day jobs, putting together these electronic widgets, as we like to call them, and they sold them to a manufacturer in their hometown that put them into, as a component, into their products. Now, over the years, this became a major account for them, and as the products of the larger manufacturer grew in popularity, there were more and more orders for these small widgets. Now, the small business owner got bigger and bigger as time went by. He started hiring people. He moved to an industrial office complex in a little warehouse district, started using that area as the assembly point for his products. And as the years went by and his business grew, eventually one night he was at a Christmas party with his main customer who told him, you know, we buy so many products from you, we ought to just buy your business. And that is where he remembered that he had been to my workshop and had heard about the Charitable Remainder Trust. Now, because he and his wife had managed their business well, they had reinvested into the business, they had hired employees, the value of that business gradually rose over the years. After they had been in business about 10 or 15 years, along was going to come now a possible offer from this major account that wanted to buy their business. That is where the Charitable Remainder Trust came into play. The small business owner transferred most of the stock of his company over to a charitable remainder trust because he remembered attending my workshop and hearing about this wonderful way to avoid capital gains taxes, to receive a lifetime income, and then to pass the remainder over to charity. Well, what he did, he and his wife put about 80% of their stock into the charitable remainder trust. And then they sold the stock, and because it was owned by the charitable trust on the date of sale, there were zero capital gains taxes to pay. Now, because the charitable trust was the owner as of the date of sale, there was no federal or state capital gains taxes to pay, and they were able to benefit from the entire amount. Now, remember, the client is the trustee as well as the income beneficiary of the charitable remainder trust. So the husband and wife took the proceeds of their sale, they reinvested it for income, and it paid them an income for the rest of their lives. When the second spouse dies, then at that time, the remainder passes to the charity of your choice, whether it's your own family foundation or your church or your alma mater or some other charitable organization that you would like to benefit. Now, the couple continued to receive income from the proceeds that were reinvested. In fact, it was lifetime income. And at the end of the life of the second spouse, when it passed to the charity of their choice, half of it went to their own family foundation, which their kids ran. And the other half went to a local nonprofit charity that they had selected many years before. Now, under the terms of the trust, that remainder beneficiary can be changed up to a certain point. But at your death, they are going to receive the remainder. That's why it's called the charitable remainder trust. Now, in addition to being the grantor of the trust and the trustee of the trust, you're also the lifetime income beneficiary, meaning that throughout your life, you're going to receive the income from the trust until your death, and then it will pass to the charity. And that is when your successor trustee will step into your shoes. That might be a member of your family, and they will make that transfer over to the charity. But wait a minute, what about their family? Did they just inherit their kids? In a manner of speaking, they did. But here's what they did to resolve that problem. They took a portion of the savings they would have paid in capital gains taxes, and they bought a life insurance policy that paid off into an irrevocable life insurance trust for the benefit of their children. So they got the full benefit of the capital gains tax bypass trust and the income for the rest of their lives. And at their death, the life insurance policy paid for with their tax savings, paid off tax-free to their children. Now that's a home run. The capital gains tax bypass trust, or charitable remainder trust as it's called in the IRS code, is a wonderful way to plan. It enables you a way to get the maximum in lifetime income benefit during your retirement years, and at the same time leave a wonderful legacy to your loved ones and to the charities that you would love to benefit. I'm attorney Michael Potter, and I'd love to hear from you.